How do you think the calculus has changed for investors after yesterday?
Well, I think the market reaction, and as you see since yesterday, is trying to figure that out as we speak. I think, and I think it reflects, in our view, some mixed messages that have been coming through yesterday. We would love to see to think that there's an all clear now and we have clarity on what's coming next. But I think the reality is very different. Mixed messages because on the one hand, we had a big 50 basis points cut. But on the other, we get a characterization that the economy is solid, the risks are balanced, and the Fed, they think, are not beyond the curve. So that this one of these things that doesn't seem to be aligning here. Mixed messaging because we're talking about recalibration, which has a meaning that it's not autopilot and so on. At the same time, they're signaling very aggressive cuts from here, as we were just discussing. So I think the mixed messages mean that, like, as we go, we're gonna start looking back at this meeting and maybe interpret what was said differently. So I don't think we're done here.
Well, it's interesting. You see the jobless claims data coming in this morning and showing some promising signs in the labor market. You also see it in earnings, at least for this morning. Interesting to hear Darden Restaurants saying that after July, traffic really started to improve. Can you also think about the idea here that a 50 basis point cut by the Fed would also start to impact savings rates that you might get at a bank, particularly ones that have been offering such high rates to consumers to begin with? How much money can move and where does it go to?
Yeah, so I think we're at the beginning, right? So I think 50 is a big one-day move, but at the same time, we don't believe we're going to see the easing the expectation that we're currently seeing. So, and since these rates that people are paying are getting in their savings accounts are sticky, I'm not sure that that's going to lead to big flows just yet. So my starting point would be that this would be marginal for now. The shift in savings versus consumption. What is more at play right now is I think the consumption is still very solid. I mean, the economy is, this quarter will be a robust quarter, and that's going to raise questions about like what really is happening here. It's very unusual. This is a very unusual circumstance. We have financial conditions that have been easing. Continue to ease as monetary policy was at peak tightness, supposedly. So this very unusual situation I don't think is reflected in the messaging we've seen and in the kind of certainty there is on an easing cycle that has started.